Hello, everyone. Welcome to this webinar today. Is your business looking for funding? I'm Peter Towers, Managing Director of ES. Oh, I thought I did. Hello, welcome to our webinar today, when we're going to be looking at a range of issues to do with businesses raising capital, primarily as crowdsourced funding, equity raising companies. Is your business looking for funding? Crowdsourced funding, equity raising could be the answer. And that's what I'm going to discuss with you over the next 30 minutes or so. Have you heard of crowdsourced funding? Are you a company? If you're not a company, you could talk to your accountant about rolling your business. Told I've got some technical difficulties. I'll just see if that's just going to fix it. Sorry about this. So we'll go back to the beginning. Crowdsourced funding could be the answer to your problems if you're an SME business. You will need to be a company. If you're currently not operating in a corporate structure, you could talk to your accountant about having your business merge into a company structure, which would help you to be able to raise capital. So where is your business now? Do you have a vision? Are you keen to grow? Do you have strategies? Are they able to be implemented? Do you want to scale up? Go to the next stage. What does scaling up mean? I think it means that you currently got a turnover of, say, $1 million, and you've got a vision that by 3 to 4 years' time, that turnover will be $5 million. How are you going to get there? That's what scaling up's about. Scaling up looks at your leadership team, your general team, your strategies. What is your implementation strategy so that those strategies can be made something real? And where are you going to get the funding from? Because even though your profit forecast might show you're going to make more money, you're probably going to require more funds to finance the business. Because as you grow, your debtors increase. Invariably, so does your inventory. Or you need to spend more money on research and development. Or you need larger premises. And so it goes on. So scaling up needs to be carefully planned. Have you got a leadership team that's committed to growing? Some leadership teams are quite happy with the status quo. And that's not really why you'd be looking for funding in a business, because you're going to have outside shareholders coming into the business. And whilst in crowdsourced funding, not many of those external investors have got a lot of power because they don't own enough shares, there should still be a very clear responsibility on the leadership team that you're going to try to, well, they're going to try to grow the business, because they've got to create a bigger piece of cake, because the current owners need their share, but also so do the investors. They like to get a return on their investment. They want to earn dividends from the company. Is it a sound business? Is it going okay? Does it really have this vision? Doesn't necessarily mean it has to be profitable at this stage. As long as there is a vision, then there's a strategy of how it can be made profitable. But is it a sound business? Has it got prospects? Now we get round to the legal questions. that are contained within the legislation is the turnover, group turnover internationally and Australia under $25 million Australian, and other group gross assets valued at less than 25 million Australian dollars. They're the key requirements. And the third key requirement is that the company cannot be listed on a stock exchange anywhere in the world. So it's got to be clearly an unlisted company. It can be a private company and an unlisted public company, as long as they meet those turnover, gross assets and tests and not listed on a stock exchange, can raise capital as crowdsourced funding companies. And the amount of money that can be raised is $5 million in 12 months. And the company could then go back to the market the following year and attempt to raise another 5 million. And again, the following year. I don't know if there's any upper limit. I don't know if the Parliament thought about that when they introduced the legislation. Obviously, the market, in other words, the investors, must be prepared to continue to invest money into the business. The investors are being issued ordinary shares in the company. So it's not a loan. It's not some special category. It's an ordinary share that they're being issued. And those ordinary shares are going to rank alongside your shares. If you're one of the owners of the company at present, or if you're a director or a leadership team member without shares, your current shareholders will rank alongside these new shareholders. But the big benefit is no security has to be offered. You're not going to a bank and borrowing money. You're issuing shares in your company. So no security required. And there's no personal guarantees required. Directors don't have to issue personal guarantees to raise shareholder money. And there's no monthly repayments, of course, of principal and interest, because there's no loan to be repaid. Doesn't mean that there's not an expectation on the leadership team and the directors to generate profits so that dividends can be paid, but there is no documentation forcing that to happen. Are you interested? Some people are, but some people are not. You need to understand that a percentage of the company is going to be allocated to these new investors. And that will be based on the valuation of the company, which I could prepare or other consultants like me can prepare. And the current shareholders would own a percentage of that, of course, and the new investors will own a percentage of that overall company. So where to from here? If you're interested in this process, you need to get an understanding of how crowdsourced funding equity raising operates, because it is different. It was created by the government making amendments to the Corporations Act. So that's the section of legislation that applies. But under that legislation, the government created this role called the crowdsourced funding intermediary. And their role is to act as the gatekeeper for the Australian Security Investment Commission. In fact, that's the term that the Prime Minister, when he was the Treasurer, introduced this legislation. The intermediaries were the gatekeepers for the Australian Security Investment Commission. So one of their roles is they check all of the documentation. They certify that they're accepting that a company meets the requirements to be classified as a crowdsourced funding equity raising company. Obviously, the company needs to submit all of that information to a selected intermediary for the intermediary to assess. And I can assist you in going down that process. The intermediary has another role. They are also a promoter, and that's envisaged in the legislation. that the intermediary is going to be assisting the company to raise capital. So the intermediaries do that by making introduction to a database that they've already collated of potential investors. And the intermediaries claim that they have somewhere between 25,000 and 50,000 people registered on their database, or should say databases. Now, ASIC has appointed 16 of these intermediaries, and they are located in Brisbane, Sydney, Melbourne, Adelaide, and Perth. Most of them are in Sydney. About 8 of them are in Sydney. But currently only about 4, maybe 5 are proactive in the marketplace. It's very hard to get any information out of the others. 2 of the intermediary companies are dominating the market at present, with around 84% of the combined deal flow going through them. One in Sydney, one in Melbourne. In Melbourne, the company's name is Birchall, and in Sydney, the name is Equitise. But there are 3 others who are active in the marketplace and are wanting to grow. The intermediary has these wide responsibilities under the Corporations Act to sign off that they believe that the company meets the requirements. And their powers, well, obviously they can knock a company back. They can refuse to approve the company as being eligible for crowdsource funding. And then the company has got nowhere to go, other than potentially going to talk to another intermediary. But word might well get back to ASIC that that's happening, and ASIC will start asking questions. What's going on? So the intermediary has significant power, and they have responsibilities to make sure things like investment warnings are given to retail investors, and there is a complete process. Now, your company, if you go through this process, you have to produce a crowdsource funding offer document. I can assist you with that. And that document is what the intermediary approves and places on their website. And any people who are interested in investing in your company has to go to the appointed intermediary's website, sign off on a warning process that they've been given, which the company will make available to all potential investors, warning them of the risks that are involved in this type of investment. And it is the intermediary who collects the share applications and the money. The maximum period of time that your company can be listed on a website is 90 days. Now, the capital raising is undertaken a lot quicker than that normally. And at the end of that process, if the company has been successful in raising the capital, the intermediary forwards a list of the new investors, the new shareholders to the company. The company then has to issue the share certificates. And they also transfer a sum of money. In the beginning, in the negotiations with an intermediary, an agreement would have been reached on the fees to be paid to the intermediary. It's around 6 to 7% of the capital raised. But that's only paid when that targeted money is raised. Normally, the intermediaries charge around $2,000 to $3,000 as an upfront fee to assist in getting organised, to getting videos produced, and a few other things to help promote the company. It's well worth going on to one of the intermediaries' websites to have a look at what the process is, because they have videos, they have information on the companies that they're currently assisting to raise capital. So you can get an idea of how this process operates. So the documentation that's required to put this process together is a business plan. And don't worry if you haven't got these at present. People like me can assist you to prepare these documents. Business plan, budgets and cash flow forecasts, looking at the next 3 to 5 years, to try to convey to the potential investors your vision, your strategies, your dreams. Where do you want this company to go? And then the crowdsourced funding offer document has to be prepared. Now, this is a legalistic document. There are full details on the directors and the leadership team. And most companies will need assistance in the preparation of that document. So the whole package is put together, and then it's able to be forwarded to the intermediary who undertakes their due diligence review on it and will indicate to the company, yes, we're ready to go. And the pre-marketing will then commence. That's the process. But the directors and the leadership team need to be committed to this process. This doesn't occur just with you working through an advisor. The directors and leadership team have to be committed. They have to make themselves available for every day that the company's listing is on the intermediary's website to answer any questions that an investor may have raised on that website, because that is recorded. So this is a very democratic process. And anyone can see that wording, that message. Can you explain to me why? And that would normally come after someone has read the documentation, the crowdsourced funding offer document, and any other information that's been put onto the website. Companies need to have fairly good social media presence to help raise capital, because that helps get the message out to your supporters, your friends, your customers, your suppliers, your staff, that you're looking to raise capital. It is an interesting process, and companies can find that they have raised a sum of money. It might be $1 million, might be 250,000, depends what you're targeting, or it could be the full $5 million. And then you can go about creating a great business. Towers Business Development can assist in this process. We've had considerable expertise in the creation of the crowdsourced funding information for accountants throughout Australia, because we write material on that, so we can assist. So if you're interested in having a conversation with us, please send me an email, peter@towersbusiness.com.au, and I'll be happy to talk to you about how you or your organization could be funded utilizing crowdsourced funding equity raising. I should check to see whether they've got any questions. If you have, please don't hesitate to send me a message. If you're watching this later on, in a time more convenient to you, and you think of a question, send me an email, please, peter@towersbusiness.com.au, and I'll get back to you. And we're able to assist companies located anywhere in Australia on this process. Now, our upcoming webinars, and we're running a webinar each week at present to convey to the business community, especially the SME business community, that we're into a new financial year. There are a lot of challenges out there at present, but there is opportunities to create great businesses, and we would like to be able to help you. So our webinar on Thursday, the 29th of July, 1 week's time, at 2 p.m, same time as today, AEST, is how you can use Section 708 of the Corporations Act to raise capital. That section allows you to raise up to $2 million in a 12-month period, but only from 20 investors. But it can be handy at times to do that. And we also have a corporate governance overview for SMEs on Thursday, the 5th of August at 12 noon AEST. Corporate governance is very important, especially as you're growing and getting other people on the board. You don't want to be caught out that you don't know or understand something, do you? So the best way to overcome that is to do some training first and perhaps receive some mentoring on various aspects of corporate governance that you might not have been aware of or you hadn't really thought about. Because as you grow, you will find that there's pressure on the company to appoint more directors. You're going to need 2 in any case, but you can have 4 or 5, and you should be getting people who have got business skills. And that will help you attract investors' money. They think there's a strong board of directors in place. So the reason we're talking about corporate governance is that it's important that all of the directors clearly understand the aspects of corporate governance that will affect their business operations. So we've got a free webinar on that. And grants for businesses are very important. And I find a lot of SME directors and leadership team members really don't understand them. Don't know what's available. There are some very good grants out there. So we're running a special webinar on Wednesday, this time, Wednesday, the 11th of August at 12 noon AEST that you can participate in to get a better overview of how the grant system operates. Gee, we've got more. We've got business review meetings. They're very important, how they're held within a business. And that's on the 18th of August, another Wednesday at 12 noon AEST. And then we've got planning funding for your business on Thursday, the 26th of August that you can register for. Now you can register for these webinars by going to www.towersbusiness.com.au and clicking on webinars. And you'll find that list of webinars there. Just click on all of them if you want to come to all of them, or the particular webinar that you're interested in attending. So for more information, you can visit our website, www.towersbusiness.com.au, or send me an email, peter@towersbusiness.com.au, or you can give me a phone call if you wish, 1-800-232-088. I hope this overview of crowdsourced funding equity raising has given you some information that you would like to think about. If you need any more information, please contact us. If you would like a copy of a paper that we have written on crowdsourced funding equity raising, please send us an email and we will send it to you for no charge so that you can get a better appreciation of what's involved in being able to raise up to $5 million in a 12-month period from the public without having to issue a prospectus, without having to give any security, and there's definitely no personal guarantees required. Thanks for being with us today. Have a great day and stay safe if you're in the zones that are subjected to the lockdowns at present. We hope that will finish soon. Have a great day. Goodbye.